So tokenization makes the entire capital markets work more efficiently, more egalitarian, faster, smarter, stronger. And it also provides the power of self-custody or quasi-self-custody, right? It takes you to a point where if you tokenize on a decentralized network, then equities and securities could look more like bearer instruments, right? When you're holding the security at a regulated custodian in New York City and, you're on the sanction list, you lose custody of that, right? So tokenization could provide a quasi, a higher property right and a higher utility to a lot of financial assets that have value to people. Right now, I think where we're at is there's broad consensus that things should be tokenized. There is support from Atkins at the SEC and Contez at the CFTC, and from the Secretary of the Treasury, Scott Bessent, that, we should lead in digital assets, which means tokenization of all form of assets. And so I think that we're moving toward a world of de facto recognition of digital securities and digital tokens from the SEC and the CFTC, and it'll come through the rules process, but we don't quite have it yet. And as the de facto standards build, you'll see a lot of capital flow in to these standards, and maybe they'll be codified in law before 2028. Maybe they won't. The only thing that's very clear to me, right, the greatest regulatory clarity is Bitcoin is a digital commodity. And I think the rest is it's a Wild West, but it's a Wild West in a liberal, progressive political environment where there's support from the White House and the SEC, Treasury, and the CFTC. And 2 years ago, it was a Wild West, but in a regressive, cynical, skeptical environment without political support, where the White House, the SEC, the CFTC, and Treasury were against. And so that's where we stand today.